Good morning, everybody, and welcome to this September edition of the Payroll Legislation Update. I must let you all know, first of all, I am recording this session because it then will be available on the MBKB website, but you just need to know that that recording is taking place. If you have any questions, if you can use the chat box and type your questions in. I won't pick them up as and when we're going along because there's normally a delay and it ends up that we go backwards and forwards between topics. So we'll pick up any questions at the end of the session from the chat box. Without further ado, I will turn off my camera and we will get started. So, it's a weird one this time because we've got different time frames. So what we're going to do is do it all in date order. So we're going to start off with the COVID related topics. Then we'll move on to a refresher of what's already happening in 21-22 tax year, but they might have slipped under your radar because you've got better things on your mind at the moment. And then we're going to take a look at what to expect in the next year or so. Like I've said, there will be time at the end for questions, so just use the chat box and we'll pick them up later on. So, a standing item on all payroll updates for the last 16, 17 months or so, we're starting now to see the wind down of CJRS, the Coronavirus Job Retention Scheme. It comes to an end this month, and we know that a lot of people who had previously been furloughed have now come back to work. The final people on furlough must come back by the end of this month, and those claims must be submitted by the 14th of October. However, the latest figures that are available are for July, so there's a bit of a lag. But in July, at the end of July, there were still 1.6 million people on furlough. So even though we know that more people will have come back since then, that's still going to be an awful lot of people that are on furlough now, and decisions have to be made as to what's going to happen next. If employers have staff that are still on furlough after the 30th of September, the decisions that they're going to have to make are either that they bring their employees back to work on their agreed terms and conditions, or they can bring them back to work, but it won't be on the same terms and conditions as before. So they need to agree any changes to those terms and conditions with their workers to get them back to work. And of course, there is the option to consider ending their employment. Normal redundancy rules and protections apply to furloughed employees. So employers can't claim CJRS grants for any day that an employee is serving a contractual statutory notice period. And what they will have to do is start then that redundancy process off. There is a range of information available on gov.uk to help both employers and employees, but there's no two ways about it. It is going to be a really, really tough time for everybody, and this is now going to be the time when we see how the British economy is going to react to the end of the furlough scheme. If you do need any help with termination payments, there is a fact sheet on the MBKB website. We do have training available if you need any support. COVID-related SSP. There has been a support scheme in place for small employers. So small employers, the definition this time, because we know it, the definition of a small employer will change depending on what we're talking about. But in terms of this, it's employers with fewer than 250 employees. They have been able to reclaim 2 weeks SSP for any employee who has been absent due to a COVID-related illness. Now that scheme, that rebate scheme, is also coming to an end on 30th of September. The deadline for submitting claims is longer for this, so claims must be made by the 31st of December this year. Now, something that has been associated with COVID-related SSP is that if somebody is absent because of a COVID, for a COVID-related reason, then you can pay waiting days. So essentially, if someone is off for 4 or more days, so there still has to be that period of incapacity for work. If they have been off for 4 days or more, then you can pay SSP from day one. Now that applies to anybody. That's not limited to the small employers. That, for the time being, is still going. That hasn't been suspended. It's only the rebate scheme that is ending. Just to remind you what a COVID-related absence is, it doesn't necessarily mean that they have actually got COVID. It can do. So it might be that they've had COVID, or someone that they live with has had COVID. It might be because they've been told to self-isolate because they've been in contact with someone with coronavirus, or it can be that they've been told to self-isolate by a doctor or a hospital because they're about to go into hospital for surgery. So don't just think that they can get SSP if they're ill. That self-isolation period does come into it as well. So just to recap, the rebate where you can claim back 2 weeks for small employers, that ends on the 30th of September, but the waiting days suspension where you can pay from day one, that does still keep going for the time being. Now, something that is a good outcome of coronavirus, and let's be fair, there haven't been many, but one that has is virtual right to work checks. So because of coronavirus, the Home Office introduced virtual right to work checks so that you could still keep on that recruitment process through coronavirus, even if you couldn't do it face to face. But the Home Office has realised that actually this has been quite successful. So what they're trying to do now is work on getting a digital solution that can be used in the future so that you can carry on doing them online. So what we have is, as it stands at the moment, whilst we have got still the coronavirus easements in, you can carry out a right to work check over video. What happens is that the job applicants or even existing workers can send scanned documents or photographs of documents for checks using an email or a mobile app. And then the employer should use the Home Office employer check-in service if the employee can't provide any accepted documents. Up to and including the 5th of April, if you are going to go down this route, when you arrange that video call with the worker, what you have to do is ask them to hold up the original document, so whether it's the passport or whatever, to the camera, and then you can then compare it with the documents that they have photographed and scanned in and sent through to you in advance, so that you can see that the scanned version matches the original version. And if what you have to remember is that since Brexit, what we can't accept is an EU passport or as an ID card as proof of right to work. All that does is prove that it's prove their nationality. It doesn't prove that they have the right to work. So you have to do that online right to work check. So the gender pay gap reporting deadline, in 2020, the gender pay gap reporting was suspended for that year. In 2021, when the deadlines would have been the 30th of March or the 4th of April, depending on the sector, they were both extended. So there was no requirement to provide your gender pay gap information by the March or April. It all got extended through until the 5th of October. That's the same date for whether you are public sector or whether you are public authority. So all employers with more than 250 employees, you do still have to submit your gender pay gap reporting information. The snapshot dates haven't changed. So the snapshot dates, you're still going back to 30th of March 2020, 4th of April 2020. Cycle to work easement. This is one where we've had a bit of common sense. So cycle to work is one of those benefits that still retains the advantage of tax relief because it's something that the government wants us to do, protect the environment. But there is a condition attached to cycle to work. It only becomes a benefit where you can get tax relief if the equipment, as in the bike and the safety equipment, the helmet and whatever, are used mainly for qualifying journeys. And of course, a qualifying journey is to and from work. And although a lot of people are moving back into the office, there are still a lot of people who are still working from home, and so will have had a bike through Cycle to Work scheme but aren't using it to commute at the moment. So just before Christmas last year, the government introduced this easement, and they said that they would remove that qualifying journeys condition for employees who had received their cycling equipment on or before the 20th of December 2020. So anyone who received a bike under the Cycle to Work scheme after the 20th of December, then that qualifying condition still remains. So they have to use the bike for commuting purposes in order to get the tax relief. But if they got their bike before then, when they didn't know that they were going to get a bike and then it was going to be locked down and they weren't going to be able to use it anymore, then in those instances, this condition has been removed. This is going to carry on until April 2022. So if you do have a Cycle to Work scheme, just make sure that you're aware of that easement. Tax relief for home working. More and more of us are still working from home, and if you have worked from home due to COVID throughout this tax year, you don't have to have worked from home every single day, but if you have been working from home, then your employer can pay you an allowance of £6 a week, and if your employer isn't in a position or doesn't pay you that allowance of £6 a week, then instead you can claim tax relief. Now, you can either claim tax relief on the £6 a week that employers are allowed to pay. You can claim tax relief on that amount even though you're not getting it, or you can claim tax relief on the amount of extra costs you've incurred above that weekly amount. Now that you would normally pay. Now that is complicated because you've got to have evidence, you've got to have receipts, you've got to have bills, you've got to show what your usage is and whatever. So the claiming tax relief on exact costs, that's tricky. if you just want to claim the tax relief on the £6 a week, then that's a lot more straightforward. There is an online portal that the government has brought in specifically to make it easier for people to claim this tax relief. And you just go on. The amount of relief that you want to claim is £312. The amount that you want to claim your tax relief on is £312 because that's 52 times £6. So essentially it's you £6 a week over a year. If you have chosen to work from home, then it's not available. But as long as you are working from home because circumstances mean that you have to, then you can claim that tax relief. It was in the tax year 2020 to 2021, and it is continued again across into the 21-22 tax year as well. Now then, this gets a little bit more complicated. If you are working from home, then you may well need equipment to work from home. By that I mean that you might need a suitable chair, you might need to have a mobile phone, a specific one just for work, that kind of thing. And there is an easement on that so that the equipment you may not have to pay tax on. It might not be considered to be a taxable benefit, but how it has been provided for you is what makes all the difference. So if you buy yourself a chair, for example, or it might be that you buy yourself a monitor, for example. If you do that, you buy it and your employer reimburses you for the cost of that equipment, then there are no tax implications. It's not a taxable benefit. If your employer loans you equipment, so they allow you to take your chair home from work, the one that you used in the office, they allow you to bring home. Your monitor, they do the same. They lend you that equipment, and then when you go back to the office, you take your chair back, you take your monitor back. So it's the employers and it remains the employers. They are lending it to you and then you give it back. Again, there's no tax implications. Where the tax implications come in is if the employer lends you the chair or buys a chair for you to use while you're at home, and then you don't take it back to the office and you don't give it back to the employer says, oh, never mind, it's easier, you just keep it. That then becomes a change of ownership. And in the case of a change of ownership, it then becomes a taxable benefit. So make sure if you do have any equipment, you either get your employer to reimburse you for the cost or you give it back to the employer, and then there are no tax implications there at all. So that's the quick roundup of the COVID stuff. So let's look at what's happened this year and hope that you just need to refresh your mind for that. So the zero employer national insurance contributions, if they're employing veterans, that came in from 6th of April this year on earnings up to the upper secondary threshold. The issue here is that it came in really, really quickly. So the government didn't have time to put the computer systems in place that would be able to recognise that zero rate. So for the time being, for this year, national insurance contributions for veterans are still paid. Employers do still have to pay them, but they've got to claim them back at the start of the next tax year, and they claim them back through RTI. So as the slide says, it's available when employing a veteran in their first year of employment. So let's be clear, when we're talking about veterans, we're talking about armed forces veterans, that kind of thing. They have to have served at least one day in the regular armed forces. So it doesn't mean that they're a veteran of 15 years in or whatever. All they have to have served is 1 year, and this is their first civilian employment regardless of when they left the armed forces. So I mean, we know that there are quite a lot of veterans who take a while to adjust to civilian life. So there could have been quite a gap between when they left the armed forces and when they start their first civilian employment. The length of time in that gap doesn't matter as long as this is their first civilian employment. And this 12 months is a set time period. So it starts when they start, on the first day that they start their first civilian employment. Now, it may well be that their first job in civilian life isn't for them, and so they leave that job and start another one. That 12-month period still continues. It's available to that second employer, but the 12 months does not start again. It started on their day of their first job, of their first employment, and continues for 12 months until after that date. So a second employer would just essentially be able to pick up what's left. Now, I'm going to pick up on this topic later on when we look at what's coming for the next tax year, because of course I've said that this year is a temporary solution where employers are still paying it and they'll pay it back. So a bit later on, I'm going to tell you what's going to happen for next year, for the tax year 21-22. So off payroll working. Off payroll working in the private sector has been in place now for 6 months or so. As you all know, I can't imagine that there's anybody on this call that is not aware now that employers are required to assess the status of contractors who are providing services for them. So what the HMRC has said is that they've recognised that in the first 12 months, people are going to take a while to adjust to the new regime. There might be mistakes made. So the Revenue said that they're going to have a light touch for penalties. So essentially, if you do not undertake that assessment of a worker's status, you will be fined. However, if you do assess the status but you make a mistake, then you won't be fined. So if you don't do it at all, you're going to get penalised. If you do it but do it wrong, then you're not going to get penalised in that first 12 months. So if this is something that is going on in your workplace and you're still not quite sure or whatever, then have a look at the webinar that's on our website. I think it was January 2021 that gives you the explanation, everything that you need to do. National insurance number digital service. There was a while when we couldn't apply for a new national insurance number. The pause button had been hit, but there is now an online service. So people who live in the UK and have the right to work here but do not have a national insurance number can apply online. So they can use the following documents to apply for a national insurance number, whether it's a passport, a residence permit, a national identity card from the EEA. So that's everyone in the EU plus Norway, Liechtenstein and Switzerland. If you have somebody who is working for you, you know you've done the right to work checks, you know they can, but they just need an ENO, then if they've got those documents, that's fine, they can apply online. If they haven't got those documents, then they can still apply for the national for a national insurance number, but it might well need to be a face-to-face appointment. And the same applies if they apply online and there's an issue, then they might be called to a face-to-face appointment as well. And the big caveat with all this is there's a backlog. So even when they apply and their application whizzes through, everything's fine, it could still take up to 16 weeks for that national insurance number to arrive. So what else? Plan for student loans. So this year saw the introduction of Plan for student loans. These are for people who obtain their student loan in Scotland. So previously we're on a Plan 1 student loan. Scotland have changed the rules for their borrowers, so they now move across from Plan 1 and onto a Plan 4 student loan. So remember, just because they took out their student loan in Scotland does not mean to say that they are still in Scotland. They could be working in Southampton or whatever. So you need to make sure that you are aware of what a Plan 4 student loan is. It could well apply to one of your workers. You may well have had an SL1 for one of your workers who was previously on Plan 1 and you were asked to move them across to Plan 4. The threshold for a Plan 4 loan is £25,000. So obviously that makes a difference to when you start making the repayments on that. And there is mentioned on the starter checklist as well now. So you should be aware of any new people coming to work for you, whether they are on that Plan 4 loan or not. Informal payrolling of benefits. We've had the online payrolling of benefits for quite some time now, but in years gone by, some employers had set up informal arrangements with HMRC and they just sent them an Excel spreadsheet or a CSV file or whatever, and did it in an informal way. That is now ended. So anyone who previously did that, if they hadn't registered for the payrolling of benefits and kind service and doing it officially online, then they can't do it. They can't payroll and they would have to use the P11D and then register for it next year. Amending previous year's payroll. EYUs, it feels like we've been talking about this for ages, but the earlier year updates have now ceased. But with that, you may still need to use one, depending on what year it is that you want to change. So again, this has been set out in previous newsletters that I've issued, but I'll just give you a recap. So if you want to amend the tax year ending the 5th of April 2021 and any years from here on in, you can only use a year-to-date FPS. If you want to amend the tax year that ends the 5th of April 2020, then you've got a choice. You could either use an EYU or you can use a year-to-date FPS. That same rule applies for the tax year ending the 5th of April 2019. That's either an earlier year update or an FPS. For tax years ending the 5th of April 2018, so we're going back more than 3 years now, so it's unlikely you would need to change it, but not outside the realms of possibility. If you do need to change that tax year, 5th of April 18 backwards, then you can only use an EYU and you would still have to use those. So when people tell you that the EYU has gone, it has, but only moving forward, you may still need to use it historically. And paying pay-as-you-earn by direct debit, that has never been an option before, but it is now an option. So what you can do, and this was explained in the June edition of Employer Bulletin, and it was also in my newsletter of June as well, is that employers can now pay HMRC straight from the bank account. You don't have to enter card details. It uses open banking technology, which means that it keeps it all really, really secure. So if you want to do that, you have to use online account the service is going to get extended to people who don't want to use an online account, but that's going to be further on down the line. But look on either gov.uk, Employer Bulletin, or the Payroll newsletter to get more information. So that's up to date. So let's now look ahead. Now, some of you may know that I do actually own a crystal ball. In payroll, you need a crystal ball, and Amazon very helpfully sell them. So I have one. But that being said, actually, we're in quite a good position at the moment that we don't really need a crystal ball, because a lot of the information's already come out about what's going to happen in the future. So let's now pick up on some new national insurance categories that are going to come in from next April. The first one is one that I've already mentioned to you, and that's about the employing veterans. So nice and easy, nice and obvious, there will be a new national insurance category from next April, and it's going to be category V. So I can remember that one. So there will be no secondary NIC, so employer national insurance contributions, up to the veterans upper secondary threshold, the VUST, and any earnings above that would then be paid at the normal rate. The category, the computer software should be in place, so that if you do hire any veterans from April 2022, you can just put them onto NI category V, and that will all link up with HMRC systems. What we don't know at the moment is how you go about reclaiming any NIC from this year, because you've already started employing a veteran this year, but we'll wait for that information to come out. There is another category of workers where there will be a zero rate of national insurance for employers, and that's for free parts. So before I go any further, let's talk about what a free part is. Free parts are a special kind of part where normal tax and customs rules don't apply. It could be an airport, it could be a seaport. They're similar to free zones or enterprise zones. So they're designated areas that are subject to a real broad range of special regulatory requirements, tax breaks, government support, those kinds of things. And what the government wants, and this is why they offer these employer NIC holidays, because they use these as an incentive to get employers to do what they want. The government is trying to encourage businesses to locate themselves in free ports. So they're trying to get employers to move into areas near seaports or areas near airports, so that they can stimulate that economic activity in these designated areas. So one of the ways that they're trying to encourage people to move into free ports is to give a reduced rate of employer NIC available to all free port-based businesses. So from the 6th of April, we will have a zero rate of employer national insurance applying to employee earnings over the secondary threshold and up to a newly created free port upper secondary threshold, or a FUST. Now then, doesn't that sound great with a Yorkshire accent, a FUST? For the tax year 22-23, the FUST will sit at £25,000. So earnings above that amount will be subject to 13.8%. So the free port national insurance easement is different to the veterans one. The veterans one works the same way as apprentices and that kind of thing, but the free part one isn't, and that is earnings over the secondary threshold and up to a newly created free part upper secondary threshold, or a FUST. There are going to be 4 new NIC categories. So there'll be F, which is a standard category, I, which is married women's and widows, There is an S, which is employees above the state pension age, and L, which is those who can defer paying the national insurance. Okay, so that's the three parts. The Health and Social Care Levy. So, new kid on the block. This month, the Prime Minister announced the Health and Social Care Levy. We couldn't miss that news. It was very in the headlines. The idea or the intention is that it's going to raise about £12 billion in funding a year to go into frontline healthcare and social care. And we're going to have a similar situation for this as we had for the veterans. So from April 22 onwards, for the first year, we're going to have a temporary measure while they get all the infrastructure in place behind the scenes, so that the levy itself will come into play in April 23. So for next year, it's the NICs that are going to be changed to start gathering this money in as early as possible. So from next April, for 1 year only, the national insurance contribution rates are going to rise by 1.25%. So employees on, if we think about category A, like the standard one, employees will pay their national insurance at a rate of 13.25% on those earnings above the primary threshold, up to the upper earnings limit, and then above the upper earnings limit, it's going to go up to 3.25%. Crucial to know, employees above state pension age who don't pay national insurance, they will not be affected by this. I did wonder to start with whether they're going to put their rate up from 0% to 1.25%, but they're not. State pensioners are not affected by this in the first year. Employers, if we look at that same category A, their class 1 NIC will increase to 15.05% on their earnings above the secondary threshold. Also applies to class 1A, also applies to class 1B. From April 2023, the NIC rates are going to go back to the official guidance says will return to their previous level. Now that one assumes that we're not going to have any NI increases then. So we'll go back to 12% or 13.8%. Because from April 2023, that's when this health and social care levy comes into effect. And that's going to be a formal surcharge of 1.25% of your earnings. And this time, state pensioners will also be included because it's all adults, all working adults. So whether you're state pension age or not, you will be subject to the health and social care levy. The levy contribution must be shown as a separate entry on the pay slip, so it would show that 1.25% of your earnings in health and social care levy. The existing reliefs that we've got, so we've got the ones for employers who employ workers, apprentices under the age of 25, or everybody under the age of 21, or veterans, or free ports. Those reliefs will still remain in place. The employment allowance, which is available for smaller businesses, this levy will also take into account that employment allowance. So what it will do is mean that the smallest businesses won't be affected from an employer NI point of view. The smallest businesses won't be affected because the employment allowance will still cover their contributions. So we do know quite a lot already, but there's obviously a lot more specific information that we need, and we will hope to get that over the coming months. But for the time being, that's what we do know so far. We also know quite a lot about the rates and thresholds for the coming tax year, which is unusual in September. So we know all this mainly because the Chancellor froze most rates at his budget this year. So the personal allowance is going to remain at 12,570. The higher rate threshold will remain at 50,270. The pension lifetime allowance is going to remain. Plan 2 student loan doesn't change, and nor does the postgraduate student loan. Two things that are going to change. The Plan 1 student loan threshold is going to go up by inflation, so that's going up to 20,195. And the Plan 4 student loan threshold, which has only just been in a year, and that's going to go up already to 25,375. So there is going to be easy access to apprenticeship funding as well. Now, we know already that larger businesses can transfer up to 25% of their annual levy pot. If they just pay so much that they're never going to be able to use it, then they can share it with smaller businesses. It might be that they share it with smaller businesses in their geographical area. It might be that they share it with smaller businesses in their industry sector, but essentially they can share it. But it's quite a complicated process. So the government is wanting to simplify this process. And what they are doing now, it's in the future looking ahead section of this presentation, because although it's supposed to be happening this month, we don't actually have a date of when it's going to be happening, and it's not here yet, and we're on the 24th of September. But there's going to be a page essentially on gov.uk where larger employers can pledge that they are prepared to share some of their apprentice levy pot. So they will put on this web page what their pledges are. They can specify if they want to pledge to support an apprentice in a particular industry sector or in a particular location. They can do that. They don't have to. They could be quite happy to share their levy pot nationwide. But what they have to do is commit to paying for an apprenticeship for the duration of that apprenticeship. It's not just putting a bit of money up and letting someone take a bit of money. They will commit to paying for a specific apprenticeship or many more, but it has to be for the duration of that apprenticeship, but it's only for the cost of that apprenticeship training. It's not for the cost of employing an apprentice. It's not for the wages and any other employment costs that go with it. Now on gov.uk, we have already got the information, the page for how to transfer your apprentice levy. That page is already on gov.uk. What's not on gov.uk yet is how do I access funding that someone's sharing? That page, if it's there, it's hidden because I can't find it yet. And the page that says that, if you like, the shop window with all the businesses who are saying what all their pledges are, that's not available yet either. We've been told by the end of this month, so they've got 6 days in which to get it up. But it should be really good, and that's going to start straight away because it's only this week I had somebody send me an email to say, I'm thinking of employing an apprentice. I don't pay the levy. How do I get access to funding? So we're going to help that person get some access to funding, but it would be much better if gov.uk made all that information available. So if you're in that position Either that you work for a huge company and they're able to share their levy pot, well then please bring this to their attention. And if you are in a very small business who doesn't pay the levy, and you know that you'd be desperate to take on either an apprentice or another apprentice, then keep your eyes out. As soon as this information comes out, I will let you all know. But that now leads me on to the next section of the presentation, which is structured flexible apprenticeships. I won't spend too much time on it, but I wanted to just let you know about how things are changing slightly with the MBKB apprenticeships, because we know that we get people who sometimes say, but I already know that. Why do I have to go through all that module, all that training again when I already know it? Now, obviously, we do still need to test that somebody does have that skills, behaviour and knowledge. But if they have it, and they don't need teaching that topic, then what we've brought in is structured flexibility, which means that instead of learning something you already know, you could pick up from one of the other areas of apprenticeships that we have and learn a couple of modules from them instead. So we've got 4 core routes. So we've got leadership HR, payroll and finance, quality assurance, or specialist. And you could pick up to 2 modules from one of these other core routes. So if we look at leadership HR, the apprenticeships we've got are team leader, junior management, operations manager, HR support or consultant, or business administration. Payroll, we've got payroll level 3, payroll level 5, accounts or an assistant accountant. Quality assurance, this might be something that interests you. Internal audit, quality practitioner, or customer service. And the specialist apprenticeships, every business in the country must be starting to focus their mind on corporate responsibility and sustainability. And we've got event assistant level 3. So within them, they've got all these different modules like you would have in a payroll qualification. You've got the same in HR. So you could pick and choose. You've got a core apprenticeship, and then you can select 2 units from any of the other apprenticeships just to enrich what you're doing. If you've got an interest in another area, then it will give you that opportunity to start learning extra elements. So if there is anything in there that interests you, make sure that you get in touch with MBKB. That's train@mbkbgroup.com. So, questions wise, what we have now is one question, which is, if the employer wants the equipment to be returned when we go back to the office, will it be an easier way to do the change of ownership? What would be the best way to do this? Well, if the employer wants the equipment returning, I'm assuming that that means that they bought it in the first place and they provided it. If the employer provided it in the first place and they just want it back, then that's fine. You literally just, well, I suppose it's not fine. It depends how you get there. Taking a chair back on the tube could be a bit of an issue. But if that is the case, you just give the chair back to the employer and then that's it. There is no taxable benefit. If the employer reimbursed the employee for it, so they paid them back what they'd paid out for it, then again, there's not going to be a taxable benefit either way, because you're just giving the chair back. The only time when it would be an issue from a taxable benefit issue is if the employer didn't want it back, but the employer bought it, the employer lent it out to the employee who's been sitting on it for the last 18 months, and then they say, oh, don't bother hauling it back on the tube, just keep it. Then that's when that transfer of ownership has taken place, because it belongs to the employer, he's lent it to the employee and then just said, just keep it, don't bring it back, just keep it. That then is where the taxable benefit comes in. So you wouldn't need to do, oh, sorry, I mean, if they don't want it back, right, if they don't want it back, then that is when it becomes a problem, and it has to be reported as a taxable benefit and change of ownership. So yes, the easiest way to do that would be change of ownership, assuming that the employee doesn't want to buy it off the employer. Because do you know, I'm sick of the office chair that's downstairs in my living room in the corner. I can't wait for that one to go. So the last thing I would want is for my husband's employer to say, oh, keep it. No, please take it back. I don't want it. So yes, you would need to report it as a taxable benefit, and it's change of ownership. Does that answer your question?
Hi, sorry. I think it's just easier if I say here. So I'm just concerned because we had quite a lot of COVID equipment that was purchased and claimed via payroll. So it was purchased by the employee and then reimbursed via payroll. And a lot of people bought equipment, like probably 1,300 people. And I don't think the company will take those equipments back because it's like a completely new office, chairs,
Yep.
monitors, and all of that. So my concern is how are we gonna? It's gonna be a lot.
No.
Is HRC thinking to make this easier?
If the employee purchased it themselves and the employer reimbursed them for it, then there's no issue. The only time where there's an issue is if the employer bought it, lent it out to the employee, and then says keep it. So as long as the employee's bought it and the employer has reimbursed it, then there's no issue.
Okay, so they can keep it with no problem.
Yeah.
Brilliant, thanks.
Any more questions? Just looking through the chat box, and I'm looking to see if there's any hands raised. No, there's not. So we have this session is being recorded, so it will be available on the MBK website. Oh, we do have another question. Why are they introducing Veterans NI? Like I'd said when we're talking about the free parts, what the government does is issue incentives to get us to do what they want us to do. So in the same way that we've got the incentives for certain employee benefits like pensions and cycle to work and whatever, so we get an incentive through tax relief. The incentive to employers is through national insurance relief. So the government wants employers to employ young people. That's why we've got NI relief on employing people under 21. The government wants us to employ apprentices. That's why we've got the apprentice upper secondary threshold. There is an issue with a lot of veterans leaving the forces who struggle to find work. And there have been lots of documentaries about the troubles that some veterans do have in securing work once they've left the forces. So this is another way of encouraging employers to take on veterans when they've left the service. Looking at that, it looks like that answers your question. It's because we know that not enough veterans are being employed, so it's to encourage employers to do just that. Any more questions?
Helen, mine is not a question. I just want to know HR is looking into using the levy for apprenticeship. Like I told you before, they never did.
Yeah.
So can I just ask them to send an email to that train email you put it in?
Yeah, you mean for looking into different kinds of apprenticeships?
Yeah, because
Yeah.
they haven't done anything with the money now, and they want to start looking into it.
Yeah, in that case, by all means, email that email address. And
Okay.
what I can do, because I've got your email address, I can send you some of the brochures for the different kinds of apprenticeships that we've got available. And it might well be that there are other areas within your business that they're interested in training people up. especially I'm thinking that corporate and sustainable responsibility, that might be something of interest. So yeah, I will send everything across to you.
Thank you, I appreciate it.
No problem. Any more for any more? Well, in that case, I will draw this to a close. I hope it's been of interest to you. As you know, any news as we get it, I will issue out to you in the monthly newsletter, so you can be assured that you are keeping up to date with all the changes that are taking place now and looking ahead as well. And in the meantime, take care, everybody, and I will speak to you again soon. Bye-bye.